Imagine telling someone 500 years ago that one day the most valuable companies on earth would be built by millions of strangers who had never met, never worked together, and would never even speak the same language. They would probably think you were describing magic. But that magic already exists. Every stock you buy, every company that goes public, every investment fund, every startup valued at billions of dollars, they all trace back to a single invention that quietly changed the rules of civilization. The stock market wasn't created to make people rich. It was created because humanity had reached a problem that no king, no empire, and no amount of gold could solve. For most of history, wealth followed a simple rule. If you wanted to become richer, you had only a few choices. You conquered more land, you mined more gold, you built more ships, or you worked harder than everyone else. Every fortune was tied to something tangible, something that already existed. That logic shaped entire civilizations. Kings measured power by the territory they controlled. Merchants measured success by the goods they could carry. Even the richest families in Europe believed that wealth could only grow as fast as the physical world allowed. But by the beginning of the 17th century, that belief collided with a problem unlike anything humanity had faced before. Europe was entering an age of exploration. Trade routes stretched across entire oceans. The rewards were unimaginable. A single successful voyage to Asia could return with spices worth many times the cost of the expedition. Yet the risks were just as enormous. Ships disappeared into storms. Pirates waded along distant waters. Disease could wipe out an entire crew before they ever reached their destination. The opportunity to create wealth had become larger than any individual could afford. Civilization had reached a point where ambition was no longer limited by ideas. It was limited by capital. The real story, then, is not about ships. It is not about spices. And it is certainly not about the stock market. The real story is about a civilization discovering, for the first time, that there was another way to create wealth. Not by owning more land, not by extracting more resources, but by allowing thousands of ordinary people to finance a future that had not happened yet. That is the shift that changed history. The stock market was never the invention. It was only the consequence. The real invention was something far more revolutionary. Humanity learned how to transform future possibilities into capital that could be used today. Once that happened, everything else became possible. Modern corporations, global finance, venture capital, IPOs, investment funds, even the trillion-dollar companies that dominate our world today. To understand why all of them exist, we have to go back to a small city that looked too insignificant to change history. A city called Amsterdam. This is Mind Over System, where we break down the hidden systems and ideas that shape the world you live in. Every civilization eventually reaches the same invisible wall. Not a shortage of ideas. Not a shortage of ambition. A shortage of capital. This is the point where history almost always slows down. Because every great leap forward demands resources long before it produces results. A bridge must be paid for before anyone can cross it. A factory must be built before it can manufacture anything. A voyage must be financed years before the first ship returns home. For centuries, that wasn't a problem. Most economies were local. Farmers grew food they could harvest within months. Craftsmen sold products they could finish within weeks. Even kingdoms expanded one battle at a time. The future never arrived too far after the investment. Then the world suddenly became much larger. By the early 17th century, Europe was no longer looking across rivers. It was looking across oceans. Thousands of miles away lay spices, silk, porcelain, and trading routes so profitable that a single successful expedition could earn more than generations of ordinary labor. The opportunity was enormous. But so was the cost. A single voyage demanded massive ships, experienced sailors, soldiers, cannons, food for years at sea, navigation equipment, and enough money to survive a journey that might not return for 3 or even 4 years. And even then, there was no guarantee the ships would ever come back. Storms could erase an entire fleet overnight. Disease often killed more sailors than enemy cannons. Pirates waited along critical trade routes. War could instantly turn a commercial expedition into a military disaster. For the first time in history, the greatest obstacle to creating wealth was no longer opportunity. It was risk, and risk had become too large for any individual merchant to carry alone. This was the moment civilization encountered a problem that kings couldn't solve with armies, and wealthy merchants couldn't solve with gold. The old financial system had reached its limit. Something entirely new had to be invented. That something would emerge from a small republic that, at first glance, seemed far too insignificant to reshape the world. Amsterdam. The Dutch Republic has something most European kingdoms did not. It wasn't more gold. It wasn't a stronger army. It wasn't even a larger population. It had merchants who understood one simple truth. The problem was no longer finding profitable opportunities. The problem was finding enough people willing to share the risk. Imagine standing in Amsterdam around the year 1600. You have discovered a trading route capable of making 10 times your investment. You know the demand exists. You know the ships can make the journey. You even know exactly what to buy and where to sell it. Yet none of that matters, because one storm can erase your entire fortune. One pirate attack can bankrupt your family forever. One failed expedition can destroy wealth accumulated over generations. The opportunity is extraordinary. The risk is unbearable. That is why history did not need braver merchants. It needed a different financial architecture. The breakthrough came from changing a single assumption that had governed wealth for thousands of years. Until then, ownership was indivisible. A ship belonged to one merchant. A farm belonged to one family. A mine belonged to one king. If the asset succeeded, one owner became richer. If it failed, one owner absorbed the entire loss. The Dutch asked a radically different question. What if ownership itself could be divided? Not the ship, not the cargo, the ownership. Instead of asking one wealthy merchant to risk his entire fortune, why not invite 1,000 ordinary people to own a tiny fraction of the same expedition? Each person would carry only a small piece of the risk. But together, they could finance something no individual could ever afford alone. That idea became the foundation of the Dutch East India Company. Most people remember it because it was the world's first great joint stock company. But that isn't what made it revolutionary. Its true invention was something much deeper. For the first time in history, wealth no longer depended on how much one person owned. It depended on how effectively thousands of strangers could cooperate without ever knowing each other. That changed everything. A voyage was no longer financed by a king. It was financed by society. Capital was no longer concentrated. It became distributed. And in that single shift, humanity quietly unlocked a force far more powerful than any empire had ever possessed. Collective capital. The Dutch East India Company solved one problem, but in doing so, it accidentally created another. Imagine buying a small share of one of those expeditions. The ships leave Amsterdam. They disappear beyond the horizon. Now you wait. Not for days, not for weeks, for years. During that time, life doesn't stop. A harvest fails. Your business struggles. Your daughter is getting married. A new opportunity appears. Suddenly, you need your money back. But there is a problem. Your wealth is trapped inside a voyage still somewhere on the other side of the world. The ship hasn't returned. The profits don't exist yet. And the company cannot simply give your money back, because that money is already sailing across the Indian Ocean. For a moment, it looked like the entire experiment might fail. Not because the voyages weren't profitable, but because ownership had become illiquid. Then came another idea that would quietly reshape the modern economy. If the company couldn't buy back your ownership, why couldn't someone else? Instead of waiting years for the expedition to end, you could simply sell your share to another person who believed the voyage would succeed. At first, these were just informal agreements. Merchants met in cafes. Investors gathered near the harbor. Prices were negotiated face to face. Every trade answered the same question: how much is tomorrow's profit worth today? Without realizing it, they had invented something entirely new. A market where people no longer traded ships. They traded ownership. Not spices, not cargo, not gold. Ownership itself had become an asset. And because ownership could now change hands at any moment, capital no longer remained frozen inside long-term projects. It could flow continuously from one person to another. That single change made capital liquid, and liquidity changed everything. People became willing to invest more often because they no longer had to lock away their wealth for years. Businesses could raise larger amounts of money. Projects that once seemed impossible suddenly became financially realistic. This is why the Amsterdam Stock Exchange was far more than the world's first stock market. It was the first machine designed to keep capital moving. And once capital could move freely, economic growth no longer depended on how much wealth society possessed. It depended on how quickly that wealth could find its next opportunity. That is the hidden engine behind modern capitalism. Not money. Movement. The system worked. Perhaps better than anyone had imagined. Ships were financed. Trade expanded. Capital flowed across Europe faster than ever before. For the first time in history, wealth could be created on a scale that no king could have funded alone. But every powerful invention carries a hidden cost. The printing press spread knowledge. It also spread propaganda. The internet connected billions of people. It also accelerated misinformation. The stock market was no different. The moment ownership became tradable, something subtle began to change. People were no longer asking, "What is this voyage worth?" They began asking, "What will someone else pay me for it tomorrow?" That single shift transformed the purpose of the market. Value slowly gave way to expectation. Expectation slowly gave way to speculation. And speculation eventually became detached from reality itself. History's first warning came from the same country that had invented the system. Not through another fleet, not through another company, but through a flower. Tulips had arrived in the Netherlands as rare luxury plants. At first, wealthy collectors bought them because they were beautiful and difficult to obtain. There was nothing irrational about that. The irrationality began when people stopped buying tulips to own them. and started buying them because they believed someone else would pay even more tomorrow. For the first time, an entire market was driven less by the object itself than by the expectations surrounding it. The flower had not changed. Human psychology had. The same financial system that had once financed ships crossing oceans was now financing dreams disconnected from reality. The machine had discovered that expectations themselves could be traded. And once expectations became a commodity, every future bubble was already hidden inside that first one. The names would change. Railroads, electricity, dot-com companies, housing, cryptocurrencies, artificial intelligence. But the mechanism would remain exactly the same. People often say tulip mania was the first financial bubble. That is true, but it was also something much more important. It was the first time humanity discovered that the greatest asset in any market is not money, it is belief. Because once belief becomes tradable, markets stop reflecting reality. They begin reflecting the stories people tell about reality. And that is both the greatest strength and the greatest weakness of the financial system we still live inside today. If this sounds like ancient history, consider how little the underlying mechanism has actually changed. When governments need to finance wars, they issue bonds that are purchased by millions of investors. When a technology company wants to build factories, develop new chips, or train more powerful AI models, it raises capital from shareholders who are betting on future profits rather than today's earnings. When venture capital firms invest in startups that have never made a dollar, they are doing exactly what Dutch merchants did 4 centuries ago. They are exchanging present capital for future possibilities. The tools have evolved. The mechanism has not. Even today's largest financial institutions operate on the same foundation that emerged in Amsterdam. They collect capital from countless individuals. They allocate that capital toward uncertain futures. And they rely on markets to continuously price changing expectations. This is why every major economic boom and every major financial crash follows a surprisingly familiar pattern. Technology changes. Industries change. Currencies change. But human psychology remains remarkably constant. That is why the financial system still behaves much like it did 400 years ago. The stage has changed. The actors have changed. The operating system has not. Imagine living in Amsterdam 400 years ago. You wanted to profit from global trade, but doing so meant risking your entire fortune on a single voyage. Now imagine investing today. With just a few $100s, you can become a partial owner of hundreds of companies across dozens of industries spread across the entire world. The distance between those two moments is the story of the stock market. It didn't eliminate risk. It redistributed it. That is why modern investing feels ordinary. Not because the world became safer, but because the system learned how to divide uncertainty into millions of pieces that ordinary people were willing to carry. Once this machine was built, civilization stopped growing at the speed of individual wealth. It began growing at the speed of collective belief. That single shift changed everything. Before Amsterdam, every ambitious project had to wait until someone became rich enough to fund it. After Amsterdam, ambitious ideas no longer had to wait for wealthy individuals. They only had to convince enough people that the future was worth investing in. This is why the stock market became far more than a financial institution. It became civilization's engine for accelerating time. Projects that once required generations of accumulated wealth could now begin immediately. Ideas could be funded before they produced results. The future no longer had to wait for the present to catch up. But every system powerful enough to accelerate progress is also powerful enough to accelerate mistakes. The same machine that finances breakthroughs can finance illusions. The same mechanism that builds industries can inflate bubbles. The same belief that creates prosperity can, when detached from reality, destroy it just as quickly. The operating system never changed. Only the stories running on top of it did. Perhaps the greatest invention behind the stock market was never financial. It was organizational. For thousands of years, human civilization depended on trust built through blood, religion, kingdoms, or personal relationships. If people didn't know you, they rarely invested in you. The stock market changed that forever. For the first time, complete strangers could cooperate at an extraordinary scale, not because they trusted one another personally, but because they trusted the system that connected them. That may be the real foundation of modern capitalism. Not money, not corporations, not even the stock market itself, but the ability to organize the trust, capital, and imagination of millions of strangers toward the same future. That is why the greatest wealth in history has never been created by individuals alone. It has always been created by systems that allow millions of ordinary people to believe in and build the same future together. The next time you hear the words stock market, try not to picture a screen filled with flashing numbers. Instead, picture a simple idea born in Amsterdam more than 4 centuries ago. An idea that allowed the future to be financed before it arrived. Every share you own, every company that raises capital, every retirement fund, every startup backed by investors is still following the same blueprint. The technology has changed. The scale has changed. The speed has changed. But the underlying system has remained remarkably the same. Understanding the stock market, then, is not simply about understanding finance. It is about understanding the invisible architecture that continues to shape how modern civilization creates progress, allocates capital, and imagines the future. The stock market began as one of humanity's greatest solutions. It allowed strangers to build what no king, no empire, and no individual could have built alone. But history teaches us a quiet and uncomfortable truth. Every system that amplifies human potential also amplifies human weakness. The moment we learned how to finance the future, we also learned how to believe in futures that may never exist. Perhaps the most important question is no longer how the stock market was invented. It is whether we have truly learned to tell the difference between a future worth building and a future we simply want to believe.